Gary, thing number two, going to inflation. It's not subsiding. Fed cuts again. You said Powell glued to his seat. Thing number two, the Fed's tug of war, rate cuts, inflation jitters, and Powell's unshakable tenure. Thing number two, Gary.
Yeah. The Federal Reserve had their November meeting, and they have these 2-day meetings, and at the end of the meeting, they come out and it's like when they elect a new pope, right? There's the black smoke, the white smoke, so they do this, and then we find out if we're getting rate hikes or rate decreases. Last week, the Federal Open Market Committee, that's the Federal Reserve, came out and, as expected, reduced the Fed funds rate by 25 basis points. That's 0.25%. So they lowered the Fed funds rate by a quarter point. So now the reference rate is 4.5% to 4.75%, depending on whether you're buying or selling. But what's really interesting about this is they don't have inflation under control, and we're going to get more CPI data this week. But the core CPI has not come down. We talked a week ago. The core PPI has been stuck for 6 months. I also think those measures are understated. And for people who are coming in late, CPI is the consumer price index. That's the index that people usually refer to when they talk about inflation. PPI is the producer price index, and that is the favored inflation metric used by the Federal Reserve. So and I think Alex wrote this line about the Fed lowering rates. He wrote, maybe they're just hoping inflation will subside on its own. So, like, fingers crossed, like, let's hope this doesn't lead to disaster. Why not? But the press conference did have a funny moment. I got to give Jerome Powell credit. The guy is unintentionally hilarious in his press conferences. He's just so serious about everything. There have been rumors that President Trump would ask Chairman Powell to step down or try to force him. I'm not a lawyer. I'm not aware of any legal method President Trump could use to force Chairman Powell to step down. I also don't know that that's what President Trump wants to do. It's been a rumor. It's not clear what action he's going to take. But this, of course, led to questions in the press release. And one of the reporters, asked Chairman Powell, if he, meaning President Trump, asked you to leave, would you go? And Powell, who is notorious for giving fairly long answers, just said no. And that was it. No, I'm not going anywhere. And in other comments, he's made it clear he is glued to his seat. He's not leaving. Now, that I have no criticism for him on that. He was appointed and confirmed for a full 4-year term. There's no reason he should have to go. And it's not clear that President Trump is going to ask him to. But it was just a funny moment in the middle of all this. Best case scenario is Judy Shelton in 2 more years. But, in the meantime, Powell can lower rates with his fingers crossed that inflation will somehow go down all by itself.
Gary, you're saying that a big part of the decision to cut rates is the desire to help the Treasury lower borrowing costs. You call that in the takeaway something that has failed miserably. Tell us why.
Well, and here's the thing, Rob. The Fed is not supposed to consider that policy, right? And so, we've talked about this at length on this show. That the real culprit for inflation is Congress. They overspend, and with the help of the Treasury Department, they monetize that overspending. That's just a fancy finance way of saying that as Congress overspends, the Treasury Department sells bonds, indebting us even further, and then they create cash and it gets sent out into the market. And that's the thing that's causing inflation. And for the political people here, that spending is a bipartisan problem. Both parties overspend. It's a problem for everybody. And the Fed is not really supposed to consider that, but they kind of need to at this point. With $36 trillion of debt, there's a great fear that if the Fed were to raise interest rates to a level that would get inflation under control, the borrowing costs will crush us. And at this point, they really have. Borrowing costs at this point have soared past $1 trillion a year. They're right now in the neighborhood of $1.5 trillion a year. That's only going to go up. And so we think a large reason that the Fed has been cutting a total of 75 basis points, or 0.75% over the last two meetings, is because they're trying to help the Treasury lower borrowing costs, and that has failed. So I've got the chart up here. By the way, I'm looking at USTreasuryYieldCurve.com. It is a great site for people who are interested in this kind of stuff. You have two options. One is you can go there and just look at the data yourself, or keep watching DKI. We'll tell you what's going on. This method is easier, but if you want the data, these guys have it. The 10-year, when the 10-year Treasury, when the Fed lowered rates, was at 3.6%. And as of today, it is up to 4.3%. So that's a 70 basis point increase. So the question here, and we've addressed this on the show before, if the Fed is lowering the Fed funds rate, shouldn't that make the rest of the yield curve come down too? Aren't they lowering borrowing rates? How is it the Fed is lowering the Fed funds rate, but the cost of borrowing is going up? And the answer is because the people in the bond market are not stupid. They're smart investors, and they understand that a lower Fed funds rate means more inflation, and more spending means more inflation. And so they're looking at this and saying, oh, well, they're lowering the rate now. We're going to have more inflation in the future, and they're applying a higher discount rate to future bond payments. When you do that, you say, okay, well, if I'm applying a higher discount rate, those future bond payments are worth less. Therefore, I will pay less for the bond. And the simple bond math is, if you're paying less for a bond, the yield or the rate on it increases. That's the way these things work. And so as the Fed is lowering rates to get this under control, they're getting the opposite effect. But I think that's why they've lowered. It's just not working so far.
That's thing number two. And this again is the President-elect Trump loves Bitcoin issue. If you're watching, again, grab a free subscription. That'll ensure that you get notified on all content going out through the DKI website. We'd also hope that you would consider a premium subscription. Be first on the alert for buy, sell action from Gary, current recommendation chart, and a lot of other premium access.